everyone, welcome to JIB CIB English Medium channel. My name is CA Aarti and I hope you all are doing good. So if you're planning to clear JIB 26 exam, then remember this session is very important because today we are going to complete one unit that is going to be your depreciation and its accounting. So this is your one shot video. So make sure if you are planning or if you are uh, afraid of this topic, then do follow this session till the end because here we will be revising this depreciation unit in a very fast manner. So let's start this session. And first of all, if you haven't subscribed to our channel, do subscribe it, share the session with your friends and colleagues so that they can also take the advantage of this particular session. So let's start. First thing that is going to be meaning of depreciation. Yes, first we need to understand what is the meaning of depreciation. So depreciation is an attempt to spread the cost of of a long lived assets as an expense to the profit and loss account over its useful economic life. Basically, when we are purchasing any assets, we are using it, yes, and over the period of time when we are using it, that value is falling down. Yes, that value is falling down. So the decrease in the value of your asset, that is just because of depreciation. Remember, businesses are applying this depreciation. As in individual, we are not charging depreciation on our assets. Yes, but businesses, they are maintaining this data over the period of time. They are reducing their assets value when they are using it, when they are actually doing the manufacturing based on it. So that is because of depreciation. Yes, so depreciation is an amount, or this is in one method through which you will divide the assets value over the period of time, and generally we transfer this depreciation to profit and loss account as this is your non-cash expense. Yes, this is your non-cash expense. And as soon as you see this term expense, remember we need to apply which golden rules of accounting? That is going to be nominal rule. Yes, and as per nominal rule, expenses you need to show on which side, debit or credit? Debit side. Yes, I hope this point is clear. Now, what are the reasons why we are charging this depreciation? Why we are not enhancing the value of our assets? So there are a few factors which affect this point. So number one point is wear and tear due to actual use. Basically, when you purchase, let's say car. Yes, today you purchase car on 2027, 2026, 1st April, and after 5 years, if you want to sell it, are you going to receive that same amount? No. Yes. For example, let's say you purchase one vehicle by paying amount rupees 20 lakhs. Okay? After using this car for 5 years, now you decided to sell this car. So tell me, what selling price you will be charging? 20 lakhs, about 20 lakhs, or below 20 lakhs? Of course, it will be below 20 lakhs because you have utilized that car over the period of time. Correct? So this is because of actual use. You will reduce that value. Second, a flex of time. Here, mere passage of time will cause a fall in the value of an asset even if it is not used. Suppose I purchased one car. Okay, let's say I purchased one car on 1st April 26. Now I don't know how to drive the car. Yes, I don't know how to drive. So what I did, though I purchased one car by paying rupees 30 lakhs. I purchased one car by paying rupees 13 lakhs. Now, I don't know how to drive, so I'm not able to use it. Yes, it's just standing in my go down area or in my parking area. Now, after 1 year, yes, I decided as I'm not using it, so let's sell it. Okay, not after 1 year, let's after 2 years. So this is now 31st. This is your 31st March 2028. Yes. Now, after 2 years, suppose now you are interested in that car. Okay, as you know that I never use that car. Yes. So now you are interested to purchase it. So tell me what amount you are going to pay. Yes. How much you are ready to pay on 31st March 2028? 30 lakhs only. B, let's say 15 lakhs, or C, more than that, let's say 35 lakhs. Yes, tell me, how much amount you are ready to pay after 2 years? Of course, you will say that is going to be less than 30 lakhs because that machine is going to be old, technology is going to be old. Yes, that is never used car. Yes, so machine, engines, everything is going to be very old. We need to polish it. Yes, we need to send that car for the servicing. So because you have not used that car, but then also you can see value has been decreased. Yes, so that is because of effects of time. Next is obsolescence. Here, new invention or permanent change. Every year, yeah, as you can see, iPhones. Yes, every year one new iPhone is coming. Correct. So whatever old iPhones you are seeing, their value is decreasing over time. Why? Because of old technology, permanent change in the market. Then accidents, of course, because of accident also value will be decreased. Then fall in market price. Now in market only that value has been reduced. So these are few causes of depreciation. Remember, in exam you can find at least 3 to 4 marks question from this topic. Yes, in exam they are asking depreciation numerical question as well as they can ask theoretical question based on this. So this is about causes of depreciation. Now how to pass accounting? What I said when we started this depreciation is your non cash expense. Yes, depreciation is a non-cash expense. So which rule we are going to apply here? We are going to apply nominal rule. Yes, we are going to apply nominal rule. So as per nominal rule, expenses you will show on which side, debit or credit? Debit side. So in your journal entries, of course, every time you will show depreciation on your debit side and credit side, as we are following dual aspect accounting. Yes, we know that for every debit we need to pass credit entry. So in this case, you know that you are going to show depreciation account on your debit side, but which account we will be writing on this credit side? So remember, we are charging depreciation on your tangible fixed asset. Yes, we charge depreciation on tangible fixed assets. Yes, so now here, whatever assets you are using or whatever assets you are going to reduce, you will write that name. Yes, suppose if you are reducing machines, so you will write machine account. If you are using, let's say, plant, you will be writing plant account. If you are using car, you will write to car account. Yes, now why we are showing machine, plant, assets on your debit side? Here we are showing, sorry, on your credit side, why we are showing assets? Because we are following rule, which golden rule we are following here? Real account. Yes, as per real account, here debit means what comes in, which increases the value. If you want to reduce the value, you need to show credit. Yes, what comes in, what goes out. So if you are reducing the value or if you are selling the asset, you are showing that asset on your credit side. I hope this point is clear. So this is how you need to pass journal entry. How to pass journal entry of this depreciation? Depreciation account debit to assets account. Yes, this is how we need to pass depreciation entry. Now, coming to next, we are going to talk about different methods now. Yes, so we have four types of method. First one, straight line method. Second one, that is going to be written down value method. Third is your units of production method. Last one is your sum of the years digit method. So these are your four methods through which you can calculate depreciation amount. Yes, these are your four methods through which you can calculate depreciation amount. So let's start with the very first one, that is going to be SLM method, straight line method. Yes, first is your straight line method. Now how we are going to charge depreciation here? So basically when we are going to calculate depreciation amount of an asset, we are going to assume that the asset will lose an equal amount of value each year. Yes, we are saying that every year your machine will be giving equal amount of performance. Yes, what we are assuming here, that your machine will be giving equal amount of performance every year. For example, building. Yes, if you are using building in your first year, let's say for rental purpose, for manufacturing, Of course, you will be using that same activity. You can do the same activities even after 10 years, after 15 years. Means the output from that building will be same. So which method we are going to apply? SLM method. Then you can observe that this asset will give you same performance. This asset will be used for the same purposes. Then we are going to apply which method? SLM method. Straight line method. SLM method. Straight line method. And we need to use one formula here, that is depreciation equal to cost price of asset minus scrap value divided by estimated life of the asset. Cost price means this is your purchase price plus direct expenses you need to add. So what are direct expenses? You will be adding all the amount till you make your asset ready to use. Yes, you need to add all the amounts which you incurred to make that asset ready to use. Yes, ready to use. Let's take one example here. For example, you purchase one AC. Okay, you purchase that AC for 60,000 rupees. Yes, now you just purchase that AC for, let me write over here. What is the purchase price of that AC? Rupees 60,000. Okay. Now, can you use that AC directly without installing it? No. First, you will be, delivering, or you will be taking transportation help so that you can, bring that AC from supplier to your home. Yes, so you will be paying your transportation cost. Yes, let's say transportation cost is equal to 5,000 plus. Can you use that AC now? Practically think about it. Can you use it? No. Why you cannot use it? Because till now we haven't installed that AC. So next step is what we need to install that AC. Yes. So let's say for the installation, because without installation, how you will be using it? You have paid, let's say 3,000. Yes, this is your 3,000. So what is the amount that you incurred to make that asset ready to use? Transportation plus installation expenses. So total 68,000 you have incurred to make that AC so that you can use it. Yes, to make that asset use or ready to use, you need to add all the direct expenditure here. Yes, so what is the cost price of an asset here? This is going to be 68 and not just 60. Remember this point, because so many times in exam they are asking questions based on this pattern. Yes, because we don't know which amount we need to take, cost or purchase price. Yes, so we need to take cost price. Cost means though purchase price plus all the expenses that you have incurred. So right answer of this question is going to be 68,000 and not 60,000. Okay, minus scrap value. Scrap value means at the end of the life of that asset you will sell it. Yes, so how much amount you are going to recover from it, that is going to be scrap value. You have purchased in 2026, now you are using for the 5 years. Now in 2031 when you are selling it, yes, when you are reselling it, that amount is known as scrap value. Okay, divided by estimated life of the asset. For how many years you want to use that AC? For 5 years, for 6 years, for 10 years? That totally depends on your business model. So this is your depreciation formula which you need to use in SLM method. And these methods are very important not only in your JIB but in your CIB also. They're asking questions based on this. So let's solve one question based on this pattern. So the original cost of the asset is 6,50,000. The useful life of the asset is 10 years and the net residual value is estimated to be 50,000. See, net residual value here they are saying about scrap value. Okay, this scrap value. Yes, scrap value, residual value, any term they can use. So what you need to do here, you need to calculate depreciation. Now as per the given question, yes, what are the given data you have? That is cost, But in this question, there is no transportation cost, there is no installation cost. So let's assume any amount. No, you cannot do it. Hana, they are saying 6 lakh 50, so you need to assume that only. Then you have scrap value, or you can say residual value, that is equal to 50,000. Okay. And for how many years you're going to use it? Life is equal to 10 years. Okay. So this is your given data. But in question, they are not saying which method we need to use. So as per this three given data, you can apply only one formula, that is cost minus scrap divided by life. Okay, so cost is equal to 6,50,000 minus 50,000 divided by 10. So this is going to be 60,000. Yes, so first year you are going to charge 60,000 as your depreciation amount. Now, this 60,000 you are going to charge over the period of time. Means every year when you are going to use that asset, you will be charging 60,000. And that is what straight line method. See, when you draw one straight line with the help of a scale, yes, can you see there any fluctuations? No. In your first year also, if you're charging 60,000, in your, let's say, third year also, you will be charging 60,000. In your ninth year also, you will be charging 60,000. Means up to the 10 years, you will be charging 60 on 60,000 only. So when, if in exam they asks you about depreciation for the fourth year, tell me depreciation amount for the fourth year, that is going to be 60,000. If in exam, as per your SLM method, they ask you about sixth year depreciation, 60,000 as your depreciation. So this is how we need to give the answer in case of SLM method, straight line method. I hope this point is clear. Yes, so this is about straight line method and how to pass journal entry. Okay, so let me tell you here journal entry as well. This is going to be depreciation account debit to asset, name is not given us, so let's say asset only, asset account 60,000. This is how you need to pass journal entry. I hope this point is clear now. Okay, chaliye. Now coming to next question. Let's solve one more question based on this. A company acquires a piece of equipment. Okay, now our asset is an equipment for 8 lakhs. The equipment is expected to have a useful life 15 years and a residual value of 1 lakh. Additionally, the company anticipates that the equipment will incur a regular maintenance cost of 50,000 every year. Now, using the SLM method of depreciation, calculate the annual depreciation expense for the equipment. Now, here again we need to calculate depreciation, and here clearly they have mentioned here to use SLM method. Okay, so what is your SLM method depreciation formula? Depreciation is equal to cost minus scrap value divided by life. Okay, so here cost is already given, that is 8 lakhs. Okay, so company acquired, so this is your purchase price 8 lakhs. Then you have life 15 years. Then scrap value, that is equal to 1 lakh. And in this question they have given one more additional information, that is about 50,000. This is your regular expense, and to maintain that asset you need to incur 50,000. Yes, so I hope you know what is the meaning of purchase price. Hope you know what is life and residual value. Now let's understand this regular expenses that you need to incur. Okay, so here I am taking one example. We purchased one car, yes, by paying rupees 30 lakhs. Yes, now you decided that you will be using this car for next 10 years. Okay, now you have paid this 30 lakhs as your one time cost. So of course this is your which type of expenditure, capital or revenue? This is your capital expenditure. Okay, capital expenditure means you have incurred some long term benefit. Yes, because you are going to use this car for more than 1 year. Yes, you will be using benefit, you will be taking benefit of this car for next 10 years. Yes, now this is your capital expenditure, but every year you are going to give some incur some expenses. What type of expenses? Like cleaning expenses, yes, maintenance of that car, service of that car, yes or no? Yearly or on daily basis also you are incurring these expenses, cleaning, maintenance, services. Yes, so are you going to add this amount also in your car capital amount? Are you going to say every day that you are incurring that expenses, that is amount of your car? No. Just think what you are going to do. Okay, you purchase one car, life you're saying 10 years. Now every day you are paying cleaning charges to that boy. Yes, and on monthly basis or on half yearly basis you are taking your car for maintenance, for services. So let's say you are incurring rupees 5,000, 10,000, small amount. So this amount that you are paying on regular basis, are you going to add this in your car? So suppose, let's say after 1 year, your friend asks you that what is the amount of this car? Means how much you have paid for purchasing this car. So are you going to say rupees 30 lakhs plus 5,000 for first half, then second half 10,000. So this is your 20,000. So are you going to say 30 lakhs 20,000 as your cost? Yes, here while calculating your cost, you will be paying your purchase price plus insurance cost, yes, plus taxes, whatever amount you have incurred. You have already added in 30 lakhs. Now this 5,000 is your half yearly expenses or yearly expenses that you are incurring to maintain your car. So here if someone asks you, are you going to change your cost of that asset? The answer is no. Yes, so this 5,000 you are incurring to maintain that asset. Yes, to maintain that asset. So you will never add this 5,000 or this cleaning, maintenance, service cost in your asset amount. Okay, I hope this point is clear. And one more thing, this cleaning, maintenance and services, yes, this cost is, this expenses is actually part of your revenue expenditure. Okay, revenue expenditure means that you are incurring on daily basis. All the expenses which you incur on daily basis, that is going to be your revenue expenditure. So here we understood two things, capital and revenue expenditure. Now I hope this point is clear. Okay, so now I am erasing this example and now you need to tell me, here 50,000 that you are incurring on regular maintenance, are you going to add that thing in your total value of the asset, or you are going to ignore it? What you are going to do here? Of course we are going to say ignore or add. You are going to ignore it. Yes, because this is your revenue expenditure, correct? So no need to add in your cost. So you will be taking only 8 lakhs minus 1 lakh divided by 15. So right answer is 8 lakhs minus 1 lakhs divided by 15. So right answer is 46,667. So right answer is answer D. Yes, this is how we need to solve questions based on SLM method. I hope you got this point. Correct? Chaliye. Very easy method. Just you need to remember the formula and you need to apply the concept. Okay. Now, next method is your WDV method. WDV method says that here you will be charging depreciation. Yes, over the period of time, means your whatever value you are reducing, every year you will calculate this depreciation. Like in SLM, we calculate once and then we charge depreciation, that same amount of depreciation over the period. But under this WDV, every year you need to calculate new depreciation amount. Yes, that is what WDV. For example, let's say here You have purchased, let's say, mobile phone. Okay, this is your phone, and you have purchased this phone by paying rupees 2 lakhs. Yes. Now every year you are going to charge 10% depreciation. So first year you will be reducing by 20,000. So value of your asset is going to be 1 lakh 80. In your second year, you will be taking 1 lakh 80, not 20, 2 lakhs, and you will be charging 10%. So second year depreciation 18,000. So what is the value of your asset now? 1 lakh 80 minus 18,000, that is going to be 1 lakh 62,000. See here, I'm assuming that you have already watched one conceptual class of this, because this is your one shot. This session is for those candidates who are doing the revision. Yes, if you are reading it for the first time, then please watch this session 2-3 times again and again. But if you have done once your conceptual clarity, yes, once you have done conceptual class, then you will understand this concepts very easily, because this is revision. Okay, this is not your regular class. This is your revision. Okay. Generally, when we conduct this class, we take around 2 or 3 sessions for this, but we need to complete. We need to do revision. Okay. So every year you need to reduce your assets value, and then you need to charge on that residual value. Correct. So what is the formula here? Every year annual depreciation will be changing, and what amount you will be taking for the depreciation? Your closing value of the asset into your rate of depreciation. So two things you need to take in case of WDV method. Number one, you need to calculate your closing value of the asset. This previous year value means closing value of asset. Okay. So closing value of asset into percentage rate of depreciation. And every year your WDV depreciation amount will be changing. So if I say in a very short manner difference between SLM and WDV, here depreciation amount remains same. Okay, and here depreciation amount changes on yearly basis. Correct? Chali. So let's solve a question here. Sonata company acquired a computer on 1st April 24 at a cost of 5 lakh. The firm writes off depreciation at the rate 10% of the book value. The books are closed on 31st March every year. Calculate the diminishing balance of the at the end of the third year. Yes, now what we need to calculate? We need to calculate value of your asset, and along with that your depreciation amount. Two things we are going to calculate here. Yes, so you can call it as WDV method or diminishing balance method. Diminishing balance method, WDV method, these are the alternative names of your formula. So what is WDV method says? That you need to take your previous year value into percentage rate. Okay, so you purchased on 1st April. So let's say this is your first year. Okay, so purchased amount is 5 lakhs into depreciation, that is 10%, 50,000. So what is your closing value here? This is your depreciation amount. So for the first year, you're going to say 5 lakhs minus 50,000. 4 lakh 50,000 is your answer. Now, second year, closing value 4 lakh 50,000 into 10%. So this is going to be 45,000. Yes, so minus 45,000. So closing value of your asset is 4 lakh 5,000 in your second year. Now, in your third year, 4 lakh 5,000 into 10%, that is going to be 40,500. So answer is 364,500. Okay. Again, if they ask about fourth year, take 364,500 into 10%. Yes. So 10% is going to be 36,450 minus 364,500 minus 10%. So this will give you 3,28,050. Okay. So here, this is your depreciation amount, 40,500. Yes, this is your depreciation amount, and this is your depreciable amount. See, there are two things. Okay, this is your depreciation amount, and this 6,34,000 on which you are going to charge depreciation, that is known as depreciable amount. In I think in November 25 or in May 25, they asked one question based on this term, depreciable amount. Yes, so you have two things, depreciation. This is the amount which will reduce your value. Okay, and depreciable means assets value on which depreciation is charged. Okay, so you have two terms, one is depreciation, next one is depreciable. So depreciable is your value of your asset on which you will be charging depreciation. So here your answer is going to be 40,500 as your depreciation amount, and if they ask you about depreciable amount, that is going to be 3,64,500. Correct? Chal. So here we complete your two methods. Number one, we have discussed about straight line method. Number two, WDV method. So here we complete your two different types of method. And in exam, most of the time you will be seeing questions based on these two methods. Okay. But of course, they are asking questions based on units also, some of years digit also. But on regular basis, we generally use these two methods only, SLM or WD. Okay. And even as per your accounting standards, you have only these three methods. Okay. As per your AS 10, India 16, you have only three methods for calculation of depreciation. That is your A, straight line method, B, WDV method, and C, units of production method. Only these three methods are allowed to calculate depreciation. Yes, as per your accounting standards. Chali. So here we understood our first two methods. Now we are going to discuss our third method. But before that, if you are planning to clear your JAIIB exam, then remember this Telegram channel is very important. Yes, this is my Telegram channel. You can scan this QR code and you can join my Telegram group. And if you are doing self study, yes, when you are doing your revision, and during that if you find any difficulty, you can discuss with me directly through this Telegram group. And remember, in this particular Telegram group, I'm sharing, all your important updates, formulas, important sessions, which will help you to do your AFM revision. So make sure to join this by scanning this QR code. Chalo. So let's continue this session again with the third formula, that is going to be units of production method. Now, first two methods, SLM and your WD. SLM, WDV, we generally take their life. Okay, for how many years we are going to use it. But in case of this units of production method, we are going to calculate based on their usage. Yes, based on their usage, how much we are using it. Based on that, we are going to charge depreciation. Yes, how we are going to calculate depreciation? Based on their usage rather than going for their life. Yes, so in your units of production method, we will estimate their usage. Like if you purchase a machine in first year, how much production that machine gave you. So based on that, you will be charging depreciation. So here, the depreciation amount is not based on passage of time, but actual use of the asset. Yes, based on the actual usage of the asset. Very easy formula. So how to calculate depreciation? First of all, take your actual production that you have done based on that machine during the financial year divided by what is the total expectation that you want to generate from that. Basically what they are saying here, let's say here I have purchased one pen machine. Okay. Now I know I'm going to use this pen machine, okay, for let's say 10 years. And in those 10 years, maximum production I can do, expected my production of from that machine is equal to let's say 10 lakh pens. Okay. This is my expectation. Now, in your first year, are you going to use this 10 lakhs? Are you going to produce this 10 lakhs in just 1 year? No, because your capacity of the pen, sorry, of that machine, what is the capacity of that machine? That is 1 lakh per year. Okay. So in upcoming time or in the next 10 years, I'm going to manufacture 10 lakh pens from that machine. Means yearly I'm going to manufacture 1 lakh pens. And in first year, actual production is not just 1 lakh, but actual production is only 90,000. Yes. Again, I'm repeating what we are discussing here. Let's take one more example. Okay. Now let's say I purchased one machine, let's say a furniture machine. Okay. Acha, wait. Let's take oil machine. I know that capacity of that oil machine on yearly basis is only 10,000 liters. Okay. Per year I can process from that machine only 10,000 liters. I know this much. And I am expecting the total production of that oil I'm going to do with that machine is going to be, let's say, 2 lakh liters. Okay. Because after that machine is going to be old. Okay. I'm going to purchase new machine. This is what I'm planning now. And in first year, when I use that machine, I produced only, let's say, 7,500 liters of oil. So this is going to be my actual production. Okay. Yearly I can produce only 10,000 liters maximum, but I have processed only 7,500 liters. So that is actual. And what is my expectation for how many liters I'm going to use that machine? That is going to be up to 2 lakhs liter. Yes, so this is how we need to estimate in units of production method. So what is the formula? Actual production or usage during the period divided by total expected production into depreciable amount of the asset. What is depreciable amount? Depreciable amount means cost minus your scrap value if it is given. Okay? Otherwise ignore it. If it is given scrap value, then please subtract it. Otherwise ignore it. Don't assume any amount from your side. Guess what is depreciable amount? Cost minus scrap value. This will give you the amount on which you will be charging depreciation. Chalo. So let's solve one question based on it. A company purchases a piece of machinery for 1 lakh with an estimated total production capacity of 50,000 units. Now, in the first year, the machinery produces 10,000 units. In the second year, it produces 15,000. And what is the depreciation expense for the first year if the residual value is 10,000? So here you have cost that is going to be rupees 1 lakh. Okay. And what is the total capacity? See, when you are doing these questions for the first time, try to write all the given data. And please don't go for any shortcuts because shortcuts will help you right now. Okay. Shortcuts will help you only in your present calculations. But we need to remember, we need to understand for our exams. And for exams, means in your exams, if you want to calculate these things, you need to write first in a very detailed manner. Then only you can understand what we are doing. First year actual production is given. First year, that is 10,000. second year 15,000. Okay. And what we need to calculate? We need to calculate first year depreciation expense. And formula that you're going to apply here, that is depreciation equal to cost minus scrap value divided by life. Are you going to apply this formula? No, this is your SLM formula. Hana? This is your SLM formula. Which formula we are going to apply here? Achha, can you apply this formula, SLM formula here? Which says cost minus scrap value divided by life. Can you apply this formula? No. Why? Because life is not given here. Okay. Life is not given here. Along with this, you have residual value, that is 10,000. So we need to apply units of production method. Yes, because here we are talking about manufacturing that you have done from this machine. So formula is actual usage divided by total production into depreciable amount. So actual usage, first year only they are asking, so that is only 10,000, not 25,000, not 15,000. First year is 10,000 only. Let's say this is a financial year 26-27. So in here you have done only 10,000 manufacturing. Next financial year 2027-28. Here you are manufacturing 15,000. Okay, so that's the difference. And total you are estimating 50,000 manufacturing of goods. So depreciable amount is equal to 1 lakh minus scrap value, that is 10,000. So here answer is 90,000 into 10,000 divided by 50,000. So depreciation amount for the first year is 18,000. So right answer is answer B. Okay, this is how you need to solve. Answer is equal to B. Yes, chaliye. Now here we complete your units of production method. Now coming to last method, that is going to be sum of the years digit method. Now to calculate the depreciation charges using the sum of the years digit method, take the expected life of an asset, count back to 1 and add the figures together. So what we are doing, okay, we are going to add. Sum means what? We are going to add. Okay, we are going to add. What we are going to add? We are going to add years digit. Okay, we are going to add life's digit. Means what? Suppose if I'm saying life is equal to 3 years, so I'm going to add 1, 2, 3. So this is the sum of life. Okay, this is going to be my life's digit. Yes, so amount is going value is going to be 6. Okay, this is one example. Second example, let's say life equal to 6 years. So what is the sum here? That is going to be 6, 5, 4, 3, 2, 1. So what is the sum of this digits? 6 plus 5 plus 4 plus 3 plus 2 plus 1. That is equal to 21. Okay. So first step is to calculate sum. Step 1 here is to calculate sum. Okay. Now second step is charging depreciation. And always remember, when you are charging depreciation in your first year, you are going to charge higher amount of depreciation. Okay, so higher amount of depreciation, how you will be taking? When you will be using higher values in your calculation. Yes, suppose here I am saying I purchased one phone. Okay, value of that phone in the first year is 10,000. So here now I decided to use that phone for, let's say, 3 years. Yes, so sum is equal to what? 3 plus 2 plus 1. So this is equal to 5, 6. Yes. So in the first year, when I'm going to calculate depreciation, I will be charging highest value of depreciation. And how I will be getting highest value of depreciation? By taking 3 divided by 6, or 2 divided by 6, or 1 divided by 6. Yes, which value will give me highest amount? Of course, 3 by 6. We are saying that I'm going to use this mobile phone in this 3 years. Okay. So in this first year, I'm going to charge highest amount of depreciation. And how to calculate highest amount of depreciation? By taking highest digit, that is 3 divided by 6. So first year I'm going to charge depreciation 10,000 into 3 divided by 6. Means first year depreciation amount is 5,000. Next year 10,000 into next highest value. So 10,000 into 2 divided by 6. So this is your 3333. And last year, of course, value will be reduced. Okay, so this is going to be 10,000 divided by 6, which is equal to 1667. Okay, this is how we need to solve sum of the year's digit method. This is one just example. Let's solve one question now based on this. I hope you got this point. Okay, chalo. Let's solve a question based on this now. Using the sum of digits method, calculate the depreciation expense for an asset with useful life of 10 years. And here, the asset's initial value is 50,000. Okay. What you need to calculate? How much will the asset depreciate by the end of the third year? Okay. So let's do the solution of this. Step 1 is what? Step 1 is sum of life's digit. Okay. So here life is 10. So break it down. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So what is the addition of this? 10 plus 9 plus 8 plus 7 plus 6, 4, 5, 4, 3, 2, 1. This is equal to 55. Okay. Now, next step is what? Next step, you are going to charge, means you are going to calculate depreciation. Okay. So first year, tell me, are you going to charge in first year highest value or lowest value? Yes, highest value you are going to charge in the first year, or lowest value you are going to charge? Yes, of course, first year. In first year, we are going to charge highest value. Yes, now how to calculate highest value? What is your assets value? 50,000. So 50,000 into highest value you can get by taking 10 divided by 55. Yes, so 50,000 into 10 divided by 55 means first year you are going to charge 9,090. Second year, again 50,000. Next highest value, 9 divided by 55. So 50,000 into 9 divided by 35. This is your 8181. Third year, 50,000. Next highest value, 8 divided by 55. 50,000 into 8 divided by 55. So 7272. Okay. Then you have fourth year, 50,000 divided by next highest value, 7 divided by 55. 55, 1,000 into 7 divided by 55. 6363. As you can see, when we are further using this asset, value of depreciation is also decreasing. So over the period when you use that asset, your value will be reduced. So 50,000, now next highest value, 6 divided by 55. So 50,000 into 6 divided by 55, this is 5454. Now sixth year, 50,000 into 5 divided by 55. Seventh year, eighth year, ninth year. Okay. In exam, there is no requirement to calculate up to all 10 years. Yes, just identify the requirement of the question. But as we are practicing, we are revising our concepts. That is the reason I am solving for each and every year. Okay. So for the sixth year, this is going to be 50,000 into 5 divided by 55. So 4545. 50,000 into 4 divided by 55. Seventh year, you are going to charge 3636. Eighth year, depreciation is going to be 3 divided by 55. 2727. 50,000 into 2 divided by 55. 1818. Yes, this is how we are going to calculate depreciation. But what is the requirement of this question? How much will the asset depreciate by the end of the third year? Yes, so by the end of the third year, you are going to see 7272. If they ask total sum, if they ask like total depreciation, okay, total depreciation up to third year, you are going to add all the values like 9090 plus 8181 plus 7272. Okay, this is how you need to give the answer. Or if they're asking only third year depreciation, that is going to be 7272. This is how you need to solve your sum of years digit method. I hope this point is clear now. Yes. Chaliye, so here is one question. As per AS in India, AS 10 in India 16, recognize which of the following methods of calculating depreciation? A. SLM method, diminishing balance, units of prediction method. Of course, we know that as per AS 10 India 16, we have only these three methods. We never include sum of years digit method. So all the above three methods are part of your AS 10 and Index 16. Yes, so right answer is answer D. There is one more similar term related to your depreciation, that is amortization of intangible assets. See, generally when we talk about depreciation, yes, so generally when we talk about depreciation, we charge this depreciation on tangible items. Tangible assets means like machine, plant, equipment, computer, mobile phones. Yes, we charge depreciation. But in businesses, we are using intangible assets as well, like patents, copyrights, trademarks. Yes, so over the period of time, their value is also reducing. So on these assets, on intangible assets which are not having any physical existence, we charge amortization. Yes, the amount through which we are reducing our intangible assets value, that is given through amortization term. So amortization is the systematic allocation of the depreciable amount of an intangible asset over its useful life. So remember, when you are charging depreciation on tangible assets, you calculate depreciation. When you are charging depreciation on intangible assets, you are calculating amortization. So these are your two things. Yes. So all your important points we have discussed in this unit. Remember, you have four methods for calculating depreciation: SLM, WDV, units of production, and sum of years digit method. SLM method, we are saying whatever depreciation amount you are calculating in your first year, you are going to calculate, you are going to charge same amount over the period of time. Under WDV method, we are reducing our value, whatever closing value we are getting, on that you are going to charge depreciation. Units of production method, based on usage, you are going to charge depreciation. And last is sum of years digit method. Okay? When we know that our value of asset is going to reduce, or the life or the capacity of the asset is going to be reduced over the period, we will be charging this last method. So in the exam, they can ask any four, any method out of these four formulas. So remember these formulas. And next and last thing, one question for you. Okay, so I am reading this question. Ashok Limited purchased the machine on 1st July 2010 for 1,08,000 and incurred 12,000 includes towards installation. The company estimated the useful life of the machine to be 12 years. Salvage value of the end of its life is to be 12,000. The company follows SLM method for charging depreciation. You need to calculate depreciable amount. Okay. So first, what is the SLM formula? Okay, let me give you some hints based on this unit. SLM formula is cost minus scrap value divided by life. Okay. So what is the value of cost here? That is your purchase price, 1,08,000. Apart from this, you are also incurring one installation. Take a machine without installation, you cannot use it. So installation is also important. So you need to add 12,000. So what is the amount? 1,20,000 is your cost. Okay, so whatever depreciation you are going to calculate, use 1,20,000, not 1,08,000. Hello everyone. Next thing, salvage value is given, that is 12,000. Okay, and life of the asset is your 12 years. Okay, now here remember one thing, in India we follow accounting period concept. Accounting period concept means which starts from 1st April and ends on 31st March. Means you have purchased this machine during the year. Hello? Means you are not using this machine for 12 months. From April till March, you have 12 months. So you are not going to use this machine for 12 months. You are going to use this machine from July till March. Okay, so this is one adjustment. But in this question, they are asking about depreciable amount. Depreciable amount is that amount on which you charge depreciation. Here, you are not required to calculate depreciation. You are required to calculate depreciable amount. Depreciable amount, how to calculate this depreciable amount? That is your cost minus scrap value only. This is the formula. Okay? So I have given you so many hints. Now, this is your homework question. Let's see whether you can solve this or not. Okay. Chal. So with this, we complete our today's session. And if you want to enroll in our JAIIB batches, then use this JAIIB Mahapat 2.0. Yes. And one more very important batch that we are going to start from 7th April, that is MCQ booster batch, where you will be getting exam level MCQs, subject wise practice, PYQs, expected questions, and conceptual clarity. Each and everything only in one batch. So make sure you are enrolling in this for your last 1 month revision, and for the maximum discount you can use this coupon code, that is Y895. See whether this JAIIB attempt is going to be easy one or difficult one, that totally depends on your preparation. Okay, examiners are setting questions always as per your IF wave book, but if you are not preparing, if your concepts are not clear, then of course that paper is going to be difficult for you. But if you're revising, you're practicing, you are following one consistent format, then of course you are going to clear it with very good marks. So remember, it totally depends on your mindset, how you are preparing for your exam. Okay, not how examiner is giving you the paper. Correct? So make sure you are revising this part. Again, I am telling you, if you're doing your depreciation unit for the first time, then please watch this session at least 2 to 3 times. Hana, this session is for quick revision. We are revising the concepts. We are not reading the concepts for the first time. Yes, so let's wind up this session then. Thank you everyone for joining. Take care and bye bye.